Hi, my name is Dustin Miles. I'm with Momentum Multifamily. I have Omar Khan here today. I'm excited to learn more about him. I don't know I didn't mention this, but I've heard about you and kind of seen you from afar, even though
I didn't want
we
to
both
brag. I'm kind of a big deal, Dustin.
even though we're both in DFW and I guess we live 45 minutes hour apart or so, but anyways, yeah, I'll turn it over to you. Would love to learn more about you. Just kind of, where did you grow up? Where do you live now? And all that good stuff.
So look, I live, as you mentioned, you gave half of the story away. I live
Yeah.
in Dallas, so no surprises there,
Yeah.
right? Dustin lives in what we call Oklahoma, which is really Fort Worth. I live in the Texas part of Dallas. Dustin lives in
Yeah.
the
Yeah.
Oklahoma part of Dallas, the Fort Worth part. I was born in Dubai. I grew up in Pakistan for the most part. Went to college in Canada, University of Toronto. Studied there, worked there. Boss poached me to Calgary in the oil patch. Had
Mm.
a great stint there. Then I met my wife. She was finishing up a residency in upstate New York at the time. So it was a toss up, she moves up, I move down. And I thought to myself, well, what's the worst that could happen?
Yep.
So I moved on. But we decided she was still in upstate New York. We're like, okay, if we're moving, we're starting our life anew. There is no freaking way I want to be in the Canada of the United States. So I want to move somewhere as far south as possible. Nothing else. I wanted to be at least not dying of the cold.
Right. Right.
So Texas it was. I mean, I worked in the oil patch. That wasn't really the reason. I think I just saw too many Western movies. I was like, Texas kind of sounds cool. So, I
Okay.
never been to Texas, but I got
Yeah.
out of Houston, came to Dallas, really liked Dallas, so we moved here.
Okay.
There was no grand strategy. There wasn't
Okay.
like move here or
You're
we did our research and we're like, oh, this is the one point, the one city that's going to grow so much or something.
Yeah, watching population growth and Frisco's gotta go there. So
I mean, look, people are more disciplined than me in that regard. We're like, we're free agents of sorts. So why
yeah,
not make
yeah.
the best of it?
That's great. Okay. So, talking multifamily and all that, how in the world did you get into multifamily from, moving around as much you did?
Oh yeah,
And
look,
yeah.
I mean, luckily for me, I'd always been going luck, pure luck. I had been going to good schools all my life,
Hmm.
professionally, academically, professionally. I had a great network. And after spending about 10 years in capital markets, investment banking on the buy side as well, by the time I moved down to the US, especially Texas, it was basically, I'd like to say, look, I was in the right place, which is Texas. As you know, it's very entrepreneurial. And it's hard to
Yep.
kind of describe it to people because even when I go to other states, uh, it's one of those things where the environment is very conducive to entrepreneurialism. I don't
Right.
know what it is because there's no like one thing you can point to say, okay, this is the thing that makes people want to be entrepreneurs here. But the environment here was very productive. And the other deal was, look, I had a good network. My
Mm.
family's fairly financially sophisticated. Luckily for me, working in those environments, I was fairly financially sophisticated and I had a good network. So a lot of those things were in place, right?
Right. Right.
Obviously I didn't know, okay, I want to do this or that. And then for me, I just had a good set of capital markets as well as operating experience. And real estate seemed like a good spot for me.
Yeah.
Basically, I could take a lot of these networks and all of this, merge it together. But the biggest deal was I was also doing a lot of tax planning between my wife and I to see, okay, like in the future, how would it look like? Blah, 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 blah.
Right.
And the biggest leakage constantly, no matter how much money we would make, would be taxes. Or
Right.
like
Right.
I was
Right.
like, look, man, I don't want to be on a hamster wheel forever, right? Where the only solution, because the only solution a lot of times people offer is, well, work harder, get a
Right.
side job. And I'm like, dude, that, like, excuse me, that I don't want to do any of that. I mean, the point for everything in life is to not just work harder. I mean, there's a time to work harder, but
Right.
most of life is picking and choosing the right battles, I feel, right? I mean, if you're
Right.
playing the wrong game, working hard ain't gonna help you.
Yeah, yeah, or you put your ladder against the wrong building. It doesn't
Yeah.
matter how fast you go up. Oh, wrong building. So,
Exactly, right?
yeah.
So, but again, I think the biggest thing was right place, Texas, right time, the market was good. And
Yep.
I had a very good academic and professional background. Like, for instance, if I didn't
Mm.
have those networks, I didn't have those backgrounds, and being new to Texas, like I didn't have any family here or anything of the sort,
Right.
this would have been a much would have been a much more difficult climb,
Hmm.
right? So in that regard, a lot of luck. Luck, I feel, is very important. People tend to gloss over it. Luck is very
Yep.
important. So
Yep.
I
Yep.
would like to say, I would like to think I'm more lucky than intelligent.
Yeah, yeah. I mean, just kind of hearing your story and thinking about myself, I'm like, I'm pretty lucky I grew up in DFW and, just happened to, be here and know, where things are and know where to be and where not to be. So, yeah, 100%. So, did you go through a coaching program? Did you go through, some sort of
I'll
group?
be honest
Like,
with you, Dustin. I think most of these coaches are losers and they can't get a real job. That's why they coach other people. Look,
yeah.
Jesus Christ, man. Like, have you ever seen Sam Zell or Barry Sternlicht or John Gray from Blackstone? Do they give weekend seminars at the airport Sheraton? No, they're too busy
No.
making money. This is a very lucrative line of work. So for
Yep.
me, I personally thought, I've always thought, this is just my opinion. Most of these coaches are charlatans. Okay. That's just my opinion. I know it's a very
Yep.
strong opinion, but that's just the way I think about it. So
Yeah.
no, but again, I'm not trying to like slam coaching. Look, I get coaching. For instance, I'm playing tennis. I get coaching.
Yeah. That's awesome. Yeah.
I am, but again, let's be honest. Roger Federer isn't coaching people,
Right. Right.
right?
Yeah.
I mean, let's be clear. So I think a lot of dreams that are being sold to people in this whole coaching ecosphere, uh, it's a lot of false prophets giving false dreams to people. And
Yeah.
but it's surprising to me that how many people are willing to shell out 25, 30, 50K to get coaching from a guy who doesn't even have his own shit together.
That's true.
9 times
Yeah.
out of 10.
Yeah. 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 Or who basically has the, same experience of, someone that invested, as an LP in a few deals. So,
Yeah. Look, so
um,
that, but again, I know it's a strong opinion. A lot of people in Dallas, this is the epicenter of the coaching ecosystem.
it's the Mecca.
Right? It's the
Yeah.
mecca. So I know
Yeah.
people don't like it, but I was like, man, I'd much rather walk over broken glass than take advice from people that are even stupider than me. And I'm not intelligent at all to begin with.
Yeah. 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 Got it. Well, cool. So, and I think it does, I do want to back up. It does help. I mean, you have, I think, you went to, did you go to business school? Do you have an MBA? Like, what's kind of
Oh, I'm
your
a CFA
background?
charter holder. Yeah, look, I understand the financial part.
Yep.
Look, the point is, if you want to take it, take it. All
Yep.
I'm trying to say is, if you're going to go to these couple of guys that are really big in Dallas, you
Yeah.
better want to check their investment record because their investment record freaking sucks. And by the way, we've taken over 1,500 apartments in the last 8 months from these syndicators
Oh, wow.
that were basically flying high during boom times and were basically
Right.
portfolio flippers. Okay, all the two or three big coaches here, their track record is pretty bad,
Yeah.
pretty bad.
Got it. Um, so, I guess kind of looking, talking about your portfolio and kind of what that looks like. I know you're in a few other states. Sounds like some of the stuff more is the stuff more recently, is that local?
No, no, no. Look,
Okay.
look, luckily for us, basically, you can call it luck, good fortune, because as I mentioned, luck is a very important component of success, right? I mean,
Sure.
there's many people that work hard but are not successful, and there are many
Yep.
people that don't work hard. So luck is very important.
Yep.
That being said, we were very intentional about building our management platform for the last
Mm.
7, 8, 10 years, because we knew, look, we just didn't realize how long the upcycle would last, but we were like, look,
Right.
things
Yeah.
go up, things go down.
Yeah.
So we can't necessarily control when the market goes down, but we can try. It's not 100% control, but we can do the best we can to improve our management platform.
Right.
So
Yeah.
we kept basically investing into that, our people,
Mm.
systems, processes, and we built it over a period of time. So this is why when the down cycle, which we're going through right now, as we can all
Yep.
attest to,
Yep.
right, this is happening. We are able to step in a lot of times and take over assets, either mostly directly from lenders, where we
Okay.
have a management play. Because a lot of guys, the occupancy is down, they aren't managing their AP properly. Construction, especially CapEx, is behind the curve. And a lot of times,
Right.
unfortunately, a lot of very thoughtful, experienced people can also be stuck in this problem.
Yeah.
Look,
Yeah. Yeah.
people say, oh, well, why don't you solve one problem? Well, if a guy has 30 assets and 20 of them are dying, there's only so much somebody can do at any given moment in time.
Yep. Yep. Yep.
So that's directly from lenders. That's across Texas, Arkansas, Georgia, Florida.
Okay.
Yeah,
Okay. Got it. And so are you guys, you're vertically integrated?
pretty much. Yeah, yeah. I
Okay.
have a shareholder in a property management firm as well. So
Oh,
yeah, that
cool.
helps a lot. Yeah.
Okay. Gotcha. That's cool. Yeah. And how and you started being vertically integrated
No,
quite
not from the start. No, 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 no.
okay.
Listen, no, no, no. We really started really ramping up on it in the last 7 years or so. The vertical
Okay.
integration really in the last few years.
Gotcha.
But again, the vertical integration was more because we were just finding we were increasingly taking on a lot of property management related tasks with our asset
Oh,
management because as that platform kept developing, the
right.
amount of nuance and the amount of depth and the amount of resources we were spending there kept increasing as well. We kept reinvesting back into our business,
Yep.
right? So
Yep.
because that kept happening, we were already doing a lot of tasks that traditionally a lot of asset managers don't do or might not do, or because they're stretched really thin, right? We
Right.
always like
Yeah.
to be a little overstaffed. So that's why the transition isn't as easy, but it's a lot easier than if we were just starting anew
Right.
or we
Gotcha.
were starting from scratch.
Okay. Gotcha. Okay. So, in terms of, this year for you guys, are you trying to, sounds like you might be getting some more assets from banks, or what does 2025 look like for you guys?
I wish I could tell you because I still don't know myself a lot of
Yeah.
times.
Yeah. Yeah. Yeah.
It's
I
nothing
get it.
happens. You know this. Nothing
Yeah.
happens. And then somehow everything happens and everybody starts calling you on the exact same day. You're like, dude, like
Yep.
I have been literally looking at my screen for 2 weeks.
Yeah. Yeah.
Nothing happened. How did
Yep.
you all guys decide to call me today? All of you.
Right. Yep. Yep.
Yeah.
Yep.
So look, a
Yeah.
lot of this is we have a development platform. We're doing a lot of developments in the upper Midwest. We continue to chug along, do 3 to 4 of those a year, hopefully, right? And then we keep doing these acquisitions along the way. And then the last key component here is then we religiously pray to God to help us become successful.
Yeah, got it. Any interesting stories with related to properties that you want to share?
Yeah, I mean, look, the interesting part isn't like, oh, there was like one big thing here or anything like that.
Yep.
Because again, we're not always successful to only
Sure.
bite as much as we can chew. But
Yep.
I think a lot of it, when you have systems and processes in place, the biggest thing for us is a lot of the stuff that we're taking over, it's kind of the same playbook. Look, the
Right.
occupancy is down, cap
Yep.
rate, some deferred maintenance. So a lot of it to the lenders actually seems like, oh, everything just turn on a dime. But we're like, look, we
No.
were going to do this thing anyways. So
Yeah.
it's not surprising, but it's heartening to know that the work that we've tried to do, the processes we tried to lay out, they're actually paying out, right? Because look, we could do all of this stuff and it might not have paid out, or we might have done the wrong things.
Right. Yeah.
So it's
Yeah.
heartening to see like all the stuff that we had in our head that, and we still have in our head, but it's still, because it's a forever work in progress, right?
Yep.
You're never there,
Yep.
right? But a lot
Yep.
of the steps we took 4, 5, 6, 7 years ago to build up the team, to staff properly, that's really bearing fruit now.
That's awesome. Yeah. I know I don't know exactly when you started buying and all that, but I bought my first deal in 2014, and it was in DFW, and frankly, it was I was like, man, this is easy. You
Ah,
throw down vinyl flooring, put it in two-tone paint, you get $150 more a month. Some deals you don't have to do anything and you raise the rent. And then you had cap rates compressing, and so everybody looked like a rock star because a lot of people hey, look at my track record and look like a rock star because you doubled everybody's money in 2 or 3 years. And gosh, and then COVID hit, and then you had to work, you had to there had to be some actual asset management and all that. And so yeah, it's been pretty challenging. At least on our end, we've learned a lot, and our we have a ton of systems that we've kind of built in place over the last 5 years or so. Because of that, we were trying to kind of staff up and kind of put a lot of these systems in place, but nothing like being kind of forced to with COVID, and
Oh,
then
it brings a lot of clarity, right?
it
When you're,
does.
yeah.
Yeah, yeah,
And look, man, I might joke with one of my a long time partner. That's less of a partner, more of a guy I know. But anyways, is man, he's like my dad's age. I was like, Andy, my only regret in life is I wasn't born 10 years earlier.
yeah.
Yeah, then I'd have the entire cycle, like all of
Right.
it from
Yeah,
2011.
yeah,
And I would
yeah,
never
yeah, yeah.
work again for the rest of my life.
Yep. Yep. Well, and then I don't know, at least for me, so I was in one of those, groups, and there's good and bad, there's always but I think, something, kind of potentially not so great about some of the groups is groupthink. And so with some of that group think, the thought was, at least then, whenever I first got into multifamily in 2012 and invested passively, I was KP and all that stuff. And kind of the thought then was, everybody, at least within the, my exposure, everybody was thinking, oh gosh, when is GFC going to happen again, or something kind of similar to that. And so that gave, I bought, didn't go nuts. There were a few people that did go nuts and bought a lot, and they have, really big firms right now. But I was a little more, I guess, cautious, and
Yeah.
so, anyways, I bought some and made good money. But to your point, it could have been sit on a beach money. So, anyways, not that I'd sit on a beach, because I just like to do stuff.
How
I
about
think.
this? I would like to be given the option, and then I can choose to not sit on a beach.
There you go.
How
I
about
like
that?
that.
You
Yeah.
know, why
Yeah.
don't you
Yeah.
give me the option and let me see what I do then? No,
Yeah. Yeah.
don't just
Yeah.
tell me, oh, you'd never like to sit on the beach. I was like, no, no, no. How about you give me the
Yeah.
option? Yeah.
Yeah. Yeah. I'd probably be running on the beach or something, but yeah.
Yeah.
So, um, so you have you're vertically integrated. You guys are in a handful of states. Are you looking to go to other states, or are you trying to double down more in
Not
locations you're at?
necessarily. I mean, I mean, whatever answer I'm going to give you 2 months from now, I might do the exact opposite.
Right, sure.
That
Yeah.
being said, we're not necessarily looking to expand into other states. If anything, we're looking to decrease the number of states. But I'm saying this
Okay.
now, and I swear in 2 months, I'm the exact freaking opposite.
Yeah.
So yeah, the answer is no, we're not trying to expand, but hey man, money's money, man. If we find a good enough deal, we'll go do it.
Yeah. Yeah, gotcha. Do you guys with your vertical integration, are you third partying at all, or is it just y'all's
Yeah, it's only
assets, or?
third party up in the upper Midwest because again, we have enough volume there so we can possibly bring it in-house, but we haven't really discussed that right now. Because I
Okay.
again feel like property management is still contrary to what some people might say, it's still a very localized business. You can't just I mean, you can take your systems and processes, but again, you got to know the right GCs, the right subs, all of that sort of stuff, and that stuff takes time.
Yeah. Yeah,
Otherwise,
absolutely.
yeah, can you go do it? Yes, but you won't have a cost advantage.
Right.
And real estate, as
Right.
you all know, it's all a dollar and cents game, right?
Yep. 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 Um, are you guys in? I know you've taken over a lot of units. Are you still kind of in buy mode? Or
Oh
you?
yeah, yeah, yeah. Look, we're all again. Everybody will tell you that they're in buy mode, but the problem right now is raising equity is a real pain in the ass, as you know that,
Yeah.
right?
Yeah.
So
Yeah.
look,
Absolutely.
it's a problem for everyone. But yeah, we are in a buy mode. But a lot of times, what we might like and is our ability to go raise, say, $50 million. No, that's not there right now. Or a
Right.
$100 million, that's not there. So you really have to then pick and choose. Okay, what do I like? What can I raise money for? What
Right.
fits into my fund? All of that sort of stuff. You have to become even more methodical about it.
Yeah, yeah. On our end, I mean, because brokers will be like, okay, what are you looking for? And I'm like, honestly, we need a good story. And why, like, out of the deals that are out on the market, or off market but not really off market, what's the story on it? We need kind of a, it's I hate to. I don't know. I don't feel like I'm a very good salesman, but you kind of have to put your salesman hat on, and you kind of need a story. You kind of need to be able to craft a story, and it needs to, make sense and be attractive, for investors right now, especially when, folks have, capital calls, or, potentially losing money or whatever, out there, or maybe just pausing distributions or lower distributions or whatever. So, I think for people to, kind of step out and, hey, put those funds in, it needs to be an attractive story, at least on our end. Everybody we talk to, I mean, I'm not opposed to doing a bridge loan, but they want fixed rate loans, and they
Yeah, I
want.
have never really understood this part. I agree with you. Like, I will always go do this, or I will always do that.
Right.
Because 3 years ago, you should only do floating rate. Now it's I will
Yeah.
only do fixed rate. I'm
Right.
like, look, yeah, I agree with you. Like, it has to match what you're trying to do, but
Yep.
absolutes will work for anything.
Yeah. 100%. So yeah, and if we could, you know, uh, when when equity is a lot easier. I mean, we were buying bigger deals, and now we're, kind of, we our buy box is kind of 20 to 40 million, and would I kind of prefer something on the lower end? Yeah, because it's, less of a headache on the capital raise. So, um, do on kind of the capital raising side and all that for you guys is, are you guys any, are you doing trying to do, different things with your investors now, or just anything to kind of help, help that, level of success for you guys?
Well, I don't know. You tell me there's a way to level up that success. I'm happy to do it. But right now, um, I mean, nothing substantially is different. I just think appetite is less across the board.
Yep.
And not, I
Yep.
mean, look, relatively speaking, we are so far lower down the totem pole. We're talking bigger
Sure.
funds,
Yeah.
big private
Yeah.
equity funds, 10 to $20 billion in equity commitments. Even they are struggling right now to raise money.
Yeah.
So
Yeah.
I don't, I mean, look, I'm very open and flexible. Like, if you have, like, what have you guys done? You tell me, because I'm not opposed to doing it. I just feel
Yeah.
like if somebody doesn't want to invest money, no amount of me, I mean, I'm willing to do it, but no amount of me
Yeah.
doing something is changing their mind.
No, yeah, no amount of you doing a handstand or cartwheel or whatever is going
And I'm,
to.
by the way, totally willing to do it. I'm not opposed to it. Totally willing to do it. But what has been successful for you guys right now?
Um, yeah, we're honestly we're trying a few different things. I would say, like, the last capital raise that we did, the majority of the investors were newer investors. The folks
I've
that
heard
had invested with us many times before, the deals that, we that are in with us, I think in a good spot, but they have some losses and capital calls from, from some other operators, and so they're just like, I'm gonna just hold on to my cash, and so I get that. And so we've seen a lot more newer investors lately. We've been doing, meetup. We do meetups. We do. I've tried, investor
Is that
lunches.
helping? Is that successful, the meetup stuff? Like,
It
awareness creating? Is it actually return dollars? Like, what's it?
Yeah. It's okay. Nothing, I wouldn't say like there's any magic bullet, out there, per se. I think just trying to stay in front of people. One thing that, we haven't really, I know some people do a lot of, but I just don't want to be that, annoying person that, text, very often at all. So we haven't really, delve into that arena at all. But I guess, like, for me, I get a ton of emails, and I imagine other investors do that are on these lists and all that. And so like, when I first started out, like, people were getting one email about a deal, or maybe two, and now they're getting the, two deals an hour,
Oh,
so,
wow.
or maybe not that, but they're getting a lot more than, it's very plentiful. So,
So what
uh
about, you seeing a lot of these mentorship-based syndicators? Are they tapping out right now, or are they still in the game? What's the deal there?
Yeah, I'm not a part of any group right now, but just I'll kind of comment on, I have been to a few conferences this year. I would say attendance was probably half of what it was
Oh,
in the
wow.
past. Yeah, pretty, you could tell it was a pretty significant drop. So, I think that everything, just as we were talking about at the beginning of this, everything ebbs and flows, everything there's, ups and downs. And, honestly, I think, we've been kind of dragging along the bottom, here for a little bit. I think, personally, I kind of feel like we're, turning the corner and all that. But I think that investor sentiment is going to take longer to kind of follow. I think people need to start seeing some wins. I think that a lot of people have a lot of equity kind of tied up in deals right now, and what's going to happen to that equity, or when for a long time, like in 21 and 22, for instance, or early 22. Deals were cycling, around that time, and so people were, oh my gosh, I had a sale. I don't want to have to pay taxes on it. I need to go find another deal. And so they turn that, 200K into, and they put it, across a few deals potentially. And there's just not a whole lot of liquidity in that market at all. So, or at least that's what we're seeing. So,
So,
um,
do you think people are going to tap out, or no?
no, I think people,
And
will
by
come back.
people, I mean sponsors, not necessarily investors.
Oh, I think there's already some sponsors that have tapped out, and I think some people are going to do other stuff. I think you're seeing, a cream, the cream of the crop rises, and I think you're seeing a filtering process, right now. There's people who are out of the game. Some people who probably just are done and not coming back, or going to do a W-2 or whatever. So I think there's it was it's really easy when the tide rises and everybody's kind of brought up, and then the tide's pulled in, and you're figuring out who can swim and who can't. So I think there's certainly quite a few people are not going to come back into multifamily, and look, it's probably a healthy thing for the for just the community in general. So.
Oh, okay. Well, that's interesting to know because so many people have such a religious belief in it sometimes that, even, I mean, I'm an owner, operator, developer, and even I'm like,
Yep.
man, well, I look at it as an investment and it's a means to an end, but I don't have a religious belief in the power of this thing, right? But
Yeah.
oftentimes I meet people and they genuinely believe like this is the only game in town.
Yeah. I mean, I think, I think you just have to choose your hard, choose what you want to, do. And,
Right.
I think that, at least for me, I don't, look, if multifamily for some reason just like was not a viable asset class, period, then maybe I go, look for something else to do. But at least for the next however, 50 plus 100 years, I don't know, however long, but I think that it's a viable, asset class. And I guess I kind of see it as, okay, it's a challenge, and then this is when you get stronger and better, and this is when you're forced to really dial down on your systems. And so I see it as, kind of an opportunity. You really don't learn when everything's easy. And this is when you learn. And unfortunately for some people, and learning, there's a cost to it. So.
Yeah. So what's the secret now? Tell me the 5 steps I need to take to become rich. Come on.
Yeah. I don't think there's a get rich. I'm not much into getting rich quick.
I'm
But
not opposed to getting rich quickly.
Well, no,
I just
I'm
want to stay rich. I'm opposed to getting a lot. I'm not opposed to getting a lot of money, but then keeping it for
right.
long.
Yeah. Yeah. I agree with that. No, yeah, I mean, I'd be fine with, a quick windfall, but yeah, like you said, I want to keep it too. So, um, I mean, as far as multifamily, I mean, I'm, biased, but I think now's a really good time to buy. I think the best time to buy was probably, over the past year, or so. But I think there's some deals, out there for sure. I think, things are kind of turning the corner a little bit, and in DFW on newer deals, and Houston on newer deals, you're seeing, 20, 25 offers. You're seeing, in Houston, it's probably closer to a five cap. In DFW, you're seeing, upper fours,
So people are going in with massive negative leverage still.
yeah. So, and
I mean,
I
that's a
think,
significant amount of negative leverage. If you're like upper fours or five, and your whatever your rates are, 5.5.
yeah, they could probably, depends on their leverage and all that. They could probably do a buy down and get into the low fives. And so it's a little negative, but I think the way some of these guys are seeing it, so, some of these guys are, they're like, well, I can't build, and so I might as well, I can buy cheaper than I can build. And so you're seeing, I think, some of these people go by that would typically be builders. So, how long before, that those funds come back to start building, I don't know. Austin's going to take a while, because Austin,
Yeah, so then on just on that point, if you think Austin's going to take a while, don't you think there's more opportunity than in Austin?
I
I mean, just
personally,
on a price per pound basis, right? I mean,
yeah, personally, I do, just because I think the peak is higher there. But the I think, going back to your point about raising equity, I think equity's especially tough there. So I mean, I don't know how, if you look at any of the deals in Austin, we do. I just get pricing on them, and they keep normally. They don't get back to me at all in the past as far as deals in
they get
Austin.
back to you.
They keep on pinging me. They're like, "Hey, bring any offer." So, which is interesting. So,
So, okay, so last question, because I'm learning a lot from you. So, within these Texas metros, I mean, if equity wasn't an issue right now, where do you think if you bought something today and you have a 5-year horizon, right? You're not trying to flip out of it early. Where are you going to get the best price per pound?
yeah,
With upside, right? So with upside, because you could get something
yeah,
cheaper, but there's not a lot of upside there, right?
yeah. I think I like the B space, potentially in DFW. I like the I kind of like that A minus space in Houston, and I think, like we are just talking about, I think, Austin would be, pretty attractive. I know there was a deal that, just to give, because I'm gonna just mention this deal because it's very dramatic. But it sold. It's this deal in Austin, sold in 21 or 22, I can't remember, for 90 million. It was on sale for 65 million.
Whoa.
Um, yeah. And I'm not, and we underwrote it just to kind of see it. I still don't see how it makes sense, but because it's like I think it's a sub four cap, but
Even at 65, it is a sub four cap.
yeah, yeah. It just doesn't.
Whoa.
I don't see how a deal is ever
So where do
going to
you
make
think it would
sense.
end up trading?
I think the lenders said they would restructure, and then I think there's gonna have to be a complete reset of that asset. I don't know
Dude,
what they
that
buy it
is
at,
a
but
huge drop, man. 90 to 65. Is
yeah,
that?
it's rough.
I mean, that is a 28% drop, 27% drop, and let's assume it goes down more to
Yep,
62.
yep,
Holy moly, man.
yeah,
That is you're raising roughly close to a third of value if you go near 60 million.
yeah. Just like that. Yeah. So
Wow.
It's pretty, but I've seen, bringing offer. So, I think Austin, especially if we had a presence there, and equity wasn't so tough, I would definitely be looking there. So.
Okay, so it's Austin, then it's what, Dallas probably.
Yeah, I think it's more based on the opportunity. So if if money was not an object, I would be looking in all three of those metros. I just don't know enough about San Antonio. I've seen some pretty attractive stuff there, just looking at the price per door.
Yeah.
But I just don't know enough about San Antonio to, you know,
It's a,
to,
from what people tell me, because I've operated in asset there as well, but other people are more closer. It's a tougher market to operate.
yep, that's
And
kind of,
I've
yeah.
never really understood why that is, though.
Yeah, I don't either. But yeah, those are the three markets we already have a good presence in Houston, so we got a good handle there. And then yeah, we're seeing some interesting deals in DFW too, but some of that Austin stuff sounds pretty appealing just because you got to put up with negative rent growth for this year, and they'll start seeing a little bit of positive rent growth next year.
Yeah, that's it. I mean, you better have a lot of patient capital, man. I mean,
Yeah, yeah. Well, that's the problem. So, yep,
yeah.
yep,
Okay. Well, now I
yeah.
know.
Well, yeah. Really appreciate your time here. Is there just anything that you would kind of want to leave our audience with? Just any parting words, and
I
then
don't know. You tell me basically what are interesting topics people talk about, and then I can share my infinite wisdom with you.
Yeah, I mean, just, yeah, I guess, yeah, I don't know if I necessarily have, any
What do
topics.
people usually like talk about at the end of these type of things?
Uh, a wide variety of things. They'll, or maybe give their 2 cents on the market. Sounds like you're a buyer, so that, kind of, gives an indication of where your head's at and all that. And it sounds like you're seeing some opportunity too. Um, but yeah, I mean, it's kind of all over the place. Or, is there, I don't know if you're much of a reader or audiobook guy or anything that,
I try to listen to audiobooks, and I think the issue is right now is I've got two young kids, so I never really get a consistent stretch, right? Because
yeah, that's tough.
it's
Yeah.
the same with podcasts. Like I think I got podcasted out a few years ago. Like
Yep.
just listen to so many, and you're like, I don't want to listen
Yep.
anymore.
Yep.
But now I just don't get like a stretch where I have to do it. But yeah, look, guys, I just picked up tennis not too long ago, like a couple of months ago, at the behest of one of my buddies. He's also in real estate. And since I suck at it, I thought, I might as well read a book on it, maybe learn from people who have been around for a longer
Oh,
period
cool.
of time. And it's a really good book. Winning Ugly by Brad Gilbert. He's a ex-world number 6 player, beaten Pete Sampras, Agassi, Michael
Oh,
Chang.
wow.
But
Wow.
it's a pretty good book. I mean, all the
Okay.
guy really talks about is mostly it's mental game because he's like, look, you're not at the pro level, pretty much all of you guys. So
Yeah. Yeah.
at anything above, say, a Hall of Fame level, right? It's less to do with skill and more to do with your mental game. Like at the Hall of
Yep.
Fame level, it's your skill and the mental game, right?
Right.
Because
Right.
everybody's skilled. But
Yep.
if you say a
Yep.
club player or a weekend warrior, you don't a lot of it's just like the mental game and not like because typically what happens is you try to you get on a little swing and you want to like smash the ball, man,
Right.
right?
Right.
And every single time, at least I do it, it goes into the net or I overhit it. So
Yeah.
well, I was like, okay, that's no point. So he's like, you just gotta get the ball over the net. That's it. You don't get
Yeah.
any extra points if you get it over the net and you win versus you smash it and you win. It's the same point,
Right. Right. Right.
right?
Yeah. Yeah.
But one has a higher chance of success.
Yeah, or at least if you get over the net, it kind of, you get to live for another swing potentially.
Exactly, right?
Yeah.
And you can
Yeah.
draw, I mean, now it's tennis, but you can draw a lot of parallels for real estate, for
Yep.
life, whatever type of stuff you're in. So yeah, I was just reading this. I thought it's pretty cool. And it's
Yeah.
got a cool title, Winning Ugly.
Yeah. Kind of, yeah, dichotomy there. So,
Yeah.
um, well, cool. How do people get in touch with you? What's the best way to reach out to you and yeah, potentially invest with you?
Look, you can go to our website, boardwalkwealth.com. The form is right on the homepage. That's again at boardwalkwealth.com. So you just go there, just fill out the form, and either I or somebody from my team will be more than happy to connect with you.
Awesome. Well, sounds good, Omar. Appreciate your time. Look forward to connecting in person soon. And
It should be in my neck of the woods soon, so hopefully
yeah, sounds good,
I can
man.
give you a
All
call.
right.
Let's
Take
talk
care.
soon. Bye
Thanks,
for now.
Omar. Bye.
Bye.